Hi, welcome to this video day, which is on the 25th of July. We are on Tuesday. Today's video, we're going to be looking at using our favourite sentiment tool in Forex, which is the commitment of traders report. Now, in terms of today's video, I'm going to cover two pairs I covered last week, which were GBP/USD and Euro/USD. We made reference to the COT net traders positions in that video. Just want to go through how we use the report in a little bit more detail in this video and give our updated views on those two pairs in relation to the latest COT report, which is released on Friday. It's released each week. It's totally free. It comes from the CFTC. Any Forex trader should learn how to use it in our view. So we'll go through how we think it should be used and also look at the trade setups in more detail. Just before we go over the charts though, if you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, go to the link beneath this video and get live access to our members center. You can also check out our Facebook page, join our Facebook group of traders if you wish, and finally join our free educational mailing list. Right, let's go and take a look at the report and the trade setups. Right, chart of GBP USD. I've written up 6 points in relation to the COT net traders positions and how we use them. In terms of, in our last video, we were saying this red here, just a little red, warned of trend exhaustion, and then we get a nice move to the downside. Okay, we're blue today, but there's probably far more downside to come in this pair in terms of the way the COT net traders positions are looking. I'll do my levels of entry, stop and target and go through these points in a moment. But first of all, for anyone new to the report, let's go to where you get it. Go to the CFTC site, market data economic analysis. You want commitment of traders. Now, in terms of commitment of traders, you've got some reports here. The one you're interested in, or the one we're interested in, is Chicago Mercantile Exchange. That's where you've got the currencies traded, and we just use the short format, okay? Now, in terms of whoever designed this website, I don't think they've changed it since the 80s. It looks very kind of basic, but this contains what we want in terms of information. There's commodities and currencies here. We're going to scroll down to the British pound, which should come up shortly. Where is it? There it is. Now, this is just the raw format, okay? Now, in terms of two groups we're interested in, their movements, non-commercials. These are large speculators, big hedge funds, etc. We know they are because they have a reportable position to the exchange. That's why they're in this category. And you can see their longs here, 135,269 against 71540. So they heavily favour the long side of the British pound. Then you've got commercials. This group is really important. A lot of people who use the COT ignore the commercials. I think that's a mistake. They are basically hedgers. They're smart money at turning points. I'll explain why in a moment. Now, they're long 76229, but they've got a far bigger short position. So they oppose the larger speculators. So this is the raw data. You can get it for free. It's actual money positioning in the market. It's calculated on Tuesday, and you can get it on a Friday after the market closes. We're going to make sense of this data. So I just want to go here. Right, this is a visual way of looking at the COT, and it comes from a really great site called COT Base. There's quite a few sites that plot the COT visually, but we really like COT Base. Now, in terms of what we're really looking for is big divergences between the two groups, okay? Now, what we have here is speculators step up their longs and keep expanding their long position. You can see here in my notes, it's the biggest since 2014. Hedgers drop short against them, okay? Now, in terms of speculators, they can be right about big trends. They just tend to get caught out at turning points when their divergence with the commercials gets too big. Commercials are hedgers. They don't make or lose any money at all. They're hedging a cash position. I'll explain a little bit more about them in a moment. They're only going to move their hedges when they think prices have moved too far from fair value. Okay. Now, in terms of this report, we're not interested in every twist and turn. We want big divergence. You can see one over here on the left where the commercials build up a really big long position into this bottom. Speculators heavily short against them. The pound pushes off to the upside. A lot of time when you look at the COT, there's no clues, but we know in terms of this week's report, it strongly favours more downside in the pound. Now, here's another chart visually. This is just showing large speculators. It comes from macro ops. Look at this for a long position up here in 2014. Here are the longs. There's the top. There's the full. And then look at, this was from a week ago. Similar size position. It hadn't fallen when they'd done this chart, but it has started to fall now. And another chart here. I need to make this one just a little bit smaller so you can see it. This again shows speculative positions increasing here, the grey line. This is GBP USD price. We moved too far away. Okay, I think this one comes from Deutsche Bank. Okay, you can find plenty of visuals in terms of COT net traders positions to make it easier to spot the divergences. Now, in terms of going back to the British pound, we'll take a look at how we do the trades or do our COT trades and also where the pound might be going. So let's go back to GBP USD chart. All right, trading COT divergence. Let's go through these points. We're looking for obviously big divergence between large speculators, commercial hedgers. On the chart previously, you did see small speculators. They're irrelevant. That's just retail money. Okay, we're only interested in big money. Now, when you're trading divergences, you've got to understand the motives of the groups. Now, large speculators, they are influenced by greed and fear. That's where they get caught out of big market tops and bottoms. They can be right about big trends for a considerable period of time, but at turning points, the commercial hedgers tend to be almost always right. Okay, why is that? In terms of commercial hedgers, they are basically hedging a cash position. They make or lose no money. They're only going to move their hedges when they see prices move too far from fair value. Okay, so they are the warning sign that prices have overshot. Now, the simplest way of illustrating how a commercial hedger works, I'll give you an example in terms of someone most people will know watching this video. Richard Branson, big UK entrepreneur, owner of Virgin Airways. He saw crude oil down below $20 a barrel and jet fuel had fallen as well. Okay, so he was thinking the price may go up. This is a really good price for me. I will basically hedge in the futures market against a price rise. So I'll lock in a price, $20 a barrel crude. I can't remember what jet fuel was at the time, but it was equally low. What happened next? Oil roared up to $120 a barrel and jet fuel followed it. Many airlines went out of business. Okay, Branson was prudent. Now, in terms of it gone down to $10 a barrel and jet fuel had fallen, Branson doesn't care. He's hedged a cost that he is happy with. So that's the way commercial hedgers work. Okay, so in terms of when we're looking at the two groups, you want rapid change in divergence if possible. So they're building up positions heavily against each other, which we had in the British pound, and moves on high volatility. We get a high volatility move up here. Okay, you want to look for the reason large speculators are buying in this pair or selling, if they're heavily short. What's the reason? We know the reason here is the large speculators were looking forward to UK CPI and saying, well, UK CPI will be really strong. Bank of England will have to hike rates aggressively. That gets priced in, and then you see the pound fall back on a CPI report that didn't meet their expectations. Now, in terms of this red candle, okay, for many traders looking at the pair at the time, that won't be significant. The big trend is up. But for us, it does warn of exhaustion. Now, I do put here use aggressive entries and tight stops. I think you should when you're using the COT, because you're looking for a big break in your favour so you can get low risk and high reward. Okay, now in terms of this candle here, we just want a little bit of movement away from the 131 level, so we'll take the follow-on candle here. Now in terms of stops, you're looking for follow through, so you got double top there. Now you don't want to put your stop right behind the double top, you've got to give it a little bit of room. We gave it to 131.80 just in case we flick back up. We do flick back up on that candle, we can't take out the bodies, we can then bring our stop down behind that high. Okay, we follow through nicely to the downside. Now I do put or I did put here 0.62 double entries. We normally like to come in heavy at a turning point. Then when we've got what we consider enough or decent profit, we'll take half away and have the option to put it back in. So we take half in as we come down to 128, look to sell a break of 128. Okay, now in terms of this pair, where could we go? On the upside, I think you've got resistance there, basically the two bodies. Yeah, we kind of came through there. Okay, any rallies up here should fade. Okay, so you could sell into the level, or basically look for some weakness off the level. I'll put your stop behind 130. 130 I think is the big level on the upside. Okay, what if we don't break up? I think, if you look at the trend line here, you got a little tail here that poked 128, kind of sitting just on the trend line. Just wait for it to go through 128, stop behind here, and then look for a sell on to the downside. Now, how far could we go? That COT divergence is so big, we should get towards the 124 level. We may even shoot lower, just you play it as it goes, so to speak. But I think 124 is on the cards. So break lower, you could sell, stop behind there. If you get a nice candle following through, you could bring your stop in a bit tighter. So that's the British pound. It's a really good COT divergence still. Really good risk reward trade setup. Even if it went wrong for us, we'd have probably got another go at it. When you're trading the COT, look for risk rewards of 5 to 1. That means you get 4 trades wrong, 1 right, you're even, 2 out of 5 right, you're in profit. Okay, now in terms of the next COT trade setup, let's go and look at what's going on in Euro USD. Right, another chart from COT base, and in terms of this one, I've highlighted 2 divergences. This is the biggest long position held by specs in a year and a half. Come up here, and then prices kind of ease down. That's a big move in a week. Come up here. Okay, commercials go against them. Okay, so we're looking for prices to come down. Now, in terms of another chart, I think this one comes from Deutsche Bank. Shows GBP/USD price in blue against a speculative net long position. Okay, there's no commercials on this chart, but you can see how big the position is this week. Not far off this big position over here, where you saw some decent downside in the euro. Okay, as a COT net trader positions point to weakness, so let's go and look at the chart. Already drawn the targets in 108.50, 107 in our view, based upon the divergence and the way we see big fundamentals behind the chart. We've seen some decent downside already. That was the COT candle when the positions were calculated. Specs load up into the highs. Okay, now in terms of the move up from here, get a nice move, a bit of sideways and down, then that really kind of parabolic move. Why? Market is looking for the ECB to be really hawkish going forward, so push interest rates up, and also looking for the Fed to finish their rate hiking cycle and start cutting rates soon. that is in the price. And then too many specs along, they get rolled on stop, okay? But still more downside to come. Hopefully another 350 pips. In terms of this one, we were very aggressive. We came in on this candle here, just missed our stop, and then we tumbled down, okay? So 112.20 is our entry. So it's not a bad move to the downside. Well, it's a good move to the downside so far. We're hoping it will continue. How would you play this one? I think you might actually have a little flick to the upside in the short term. So in terms of levels, that's first resistance for us. Body, 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 body. Then you got the tails behind. Okay. If I can get that line straight. Sorry, there we go. So yeah, if we get up towards the 111 level and start to struggle into first level resistance, you can sell weakness, stop behind 111.50, something like 111.60, 70, something like that. Or what if we don't break up? Let's have a look. Do that. I think if we move lower, you got three tails here where we struggled to take out 111 before, okay? If we break, and I think if we get the other side of this 20-day moving average, 110.20, then we should start picking up volatility to the downside. First level will be 111. Then you're going to have second level there, which was first level before. So the stop could be tucked behind there. And then you're looking hopefully for a decent move to the downside. Trail your stop down, okay? I personally think we may flick to the upside in the short term, but yeah, looking for more weakness longer term. So sell rallies or sell a move lower from current levels. So yeah, there's a little bit of info on the way we use the COT net traders. A lot of people who talk about using COT net traders just really focus on what large specs are doing and don't look at the commercials at all. Now, large specs can be right about big trends for a good period of time. We very often will trade with large specs if there's no big divergence. But in terms of the commercials, yeah, let's say you were long of the euro, that CO2 divergence will give you a clue about taking profits or moving your stop up. So yeah, you should always have your eye on the commercials. It does take a little bit of practice, the COT. We've been doing it now since 1987. It's given us some of our best trades over the years. So I'd strongly recommend you research the COT more and practice trading divergence. Or if you're in our website, yeah, we obviously give charts and views on the COT as well. You can check out our member centre, like I said, on the link beneath this video. But yeah, that is the video for today. Thank you very much for watching it.